Internet has been one of the biggest revolution of modern society. It has literally changed the way the world operates. Today you have access to every information on your fingertips. And it is not a surprise that almost every startup today has technology and internet as its core. Because the internet gives you a scale that is beyond imagination. You can reach out to every person in the world in a fraction of time. In fact, all the major business giants right now, from Amazon to Facebook to Google, are technology companies. And as far as India is concerned, we also have many technology-based companies with bright growth prospects. But the problem is that very few companies are profitable. Hi friends, my name is Sahil and this is my Personal Finance Academy. Today, I am going to discuss the fundamental analysis of a technology company that is highly profitable. Let me give you a hint. This company had an IPO in June 2019 at a price band of 973. And by February 2021, this company was trading at levels of rupees 9,700. So 10 times jump in the share price within 1.5 years of listing. But then the share price corrected almost 60%. Although the share price recovered from the lows, it is still trading 50% below its peak. Can you guess the name of the company? Well, it is Indiamart Intermesh. So in this video, we'll look at Indiamart Intermesh business, promoter details, key strength, future growth, key risk, and then we'll look at the financials along with valuation. And then we will discuss if it is worth investing in Indiamart or not. But before we proceed, let me clarify that this video is only for educational purpose. Make sure that you do your own research before investing your money. To learn more about investment and money management, you can explore my online course. Alright, let's get started. Established in 1999, Indiamart Intermesh is a B2B marketplace that connects buyers with sellers. So unlike your Amazon and Flipkart, which are mainly B2C business, Indiamart Intermesh is B2B marketplace that connects small and medium enterprises as well as individuals. Indiamart Intermesh has a leadership in Indian online B2B marketplace with around 60% market share. Company claims to offer 70 million plus products and services on its platform with 7 million suppliers and 143 million buyers. Basically, Indiamart earns revenue from subscription basis. So Indiamart has got multiple levels of offering. The first level is freemium model where it has around 6.8 million suppliers. Then it has silver monthly category, then silver annually, then gold level, and then platinum level subscription. So the top 10% supplier contributes around 44% of its revenue, and overall subscription model contributes around 95% of revenue. Remaining 5% revenue is from advertising space sold on Indiamart platform. So buyers can explore the platform and can get supplier details over call, SMS, chat, email, and can even submit RFQ. Indiamart has implemented CRM system that maps the buyer requirement with right seller. It also provides cloud telephony support. So over the years, Indiamart has innovated and added various services on its platform, including request for quotation, that is RFQ, cloud telephony, price discovery, order management system, CRM-led manager, voice and multi-language search, supplier review and rating, and so on. Its services are diversified across 97,000 plus categories, including industrial plant and machinery, construction and building raw material, apparel, clothes and garments, packaging material, consumer electronics, construction, industrial and engineering, electrical equipment, mechanical components, vegetable, fruits, dairy product, operation theatre and hospital supply, chemicals, dyes, houseware, home appliances, furniture, scientific instruments, kitchen container, cosmetics, fertilizer, electronic components, pharma drugs, tools, automobile parts, gifts, crafts, sports goods, etc. You can also see the percentage of total paying subscription supplier. For example, industrial plant contributes around 8%, construction and building raw material contributes 7%, apparel clothing contributes 6%, and so on. So basically, Indiamart Intermesh offers product across the value chain. For example, it includes the raw material like plastic, steel, rubber, then machinery, then components like engine, body, tire, and the final product. Interestingly, Indiamart has a wide reach across the country. So it is not only present in metro cities, it has buyers and sellers across the town. If you look at the breakup of buyers, around 33% are from metros, 26% from tier 2 cities, and 41% are from rest of India. So very nice spread. And if you look at the breakup of suppliers with paid subscription, 57% is from metro cities, 27% from tier 2 and 16% from rest of India. If you look at the promoter and leadership detail, Mr. Dinesh Agarwal is the founder, MD and CEO of the company. Today when we hear about technology company, it is not a big deal. But Mr. Dinesh Agarwal founded Indiamart way back in 1999 when people had not even heard about internet. He left his job from USA in 1995 to build an internet business in India. And of course, it was not an easy journey. For the initial few years, Indiamart remained a free listing platform for export businesses. But Indiamart took off post 2007 when smartphone and internet adoption started to increase. And today, Indiamart has a market cap of around 15,000 crore. So Indiamart has a very experienced and competent leadership. Overall, on its business and leadership, I would rate it 9 on 10. If you look at the key strength of Indiamart, its biggest strength is its strong brand name in highly fragmented market. Earlier B2B business was driven by offline channel and it was highly fragmented. But what Indiamart has done is it has digitized this B2B business with an ecosystem of buyers and sellers. Today, Indiamart has a product catalog of 70 million plus products with millions of buyers and sellers. And the best part is that its supplier base is so diversified that none of its category contributes more than 8% in revenue. And now that there are millions of products available on its platform, it attracts a lot of buyers. And since there are more and more buyers, it attracts more and more sellers. That results in more and more product offering. And that eventually attracts more buyers. And this cycle continues. Moreover, Indiamart has made this online B2B marketplace very efficient and effective with use of technology like CRM support, AI-based matchmaking, RFQ selection, etc. Hence, over the years, Indiamart has created a strong B2B marketplace for small, micro and medium-sized segment, which is not easy to replicate. And that is the key strength of the company. If you look at the future growth prospect, one of the biggest growth driver is quick adoption of smartphone and internet by small and medium-sized business. And this adoption is only going to increase in the future. If you look at the growth strategy of Indiamart, its strategy is simple. First of all, it is focused on adding more and more buyers and sellers on its network. Then second, it is focused on large and medium enterprise to get more subscription. And third, it is focused on improving the engagement with its technology platform. In fact, Indiamart is on an acquisition spree and has acquired a good amount of stake in many startups. For example, in August 19, it acquired 27% stake in business accounting firm Vyapar. In May 20, it acquired 16% stake in distribution and sales for management company Bizom. In March 21, it acquired 11% stake in legal tech platform Logistify. In April 21, it acquired 26% stake in shipping operation automation company Shipway. In same month, it also acquired 25% stake in transport management firm SuperProcure. In August 21, it acquired 26% stake in autonomous procurement platform AER Chain. In November 21, it acquired 7.7% stake in invoice discounting firm. In December 21, it acquired 26% stake in inventory and warehouse management company EasyCom. In January 22, it acquired 100% stake in ERP software company Busy. Overall, Indiamart has invested more than 900 crore in acquisition over the last 2 years. So overall growth prospects are looking very good. Company is growing both organically and inorganically with acquisition. Hence on future growth, I would rate it 9 on 10. If you look at the key risk, first risk is fake products. Although Indiamart continuously monitors the product quality on its platform, but due to huge scale of operation, it is not easy to keep 100% track of products. Hence, there is always a risk of brand value erosion due to fake products being sold on the platform. In fact, recently US trade representatives have called out Indiamart for selling counterfeit products. Although this problem is common across platforms including Flipkart, Amazon, etc. Then second risk is competition risk. Indiamart has competition from companies like TradeIndia.com, ExporterIndia.com, but although both platforms are far behind Indiamart, but Indiamart can face tough competition from Alibaba India unit. Considering the growth potential, Alibaba can push for growth and that could be a key risk. Next risk is slowdown in demand. Since Indiamart operate in B2B space, there could be a threat of fall in demand for the business they operate in. Apart from this, being an online company, Indiamart faces cybersecurity risk as well as technology obsolescence risk. Now if you look at the revenues of Indiamart, it has grown consistently over the years. In March 16, it was 246 crore, then it jumped to 309 crore, then 404 crore, 497, 624, 665 and 729 crore. So trailing 12 month is 729 crore. So consistently there is an increase in the revenue of Indiamart Intermesh. And if you look at the profitability, it was in loss for 2016, 17 and 18. However, in 2019 it became profitable, and look at this, in March 20 it became 146. So sharp jump in profitability in 21, again a sharp jump in profitability. Now one of the reasons for this particular increase in March 20 in 2021 is due to COVID. So due to COVID there was lockdown, and obviously suppliers and buyers, they were looking for online option, and that resulted in sharp jump. And that is one of the reasons that after the economy opened up, in trailing 12 months you can see the growth is not that much. Now it would be interesting to see how the profit grows from here. Now overall on the growth ratio, I would rate it 9 out of 10. Next, if you look at the operating margin, it was in loss till 2018, and then the margin improved to 3%, then 28%. It touched a peak of 50% in March 2021. And that was the peak of COVID. And then if you can see in trailing 12 months, the margin has fallen to 47%. Now that the economy has opened up, it would be interesting to see how the margin goes from here. And if you look at the ROE and ROCE, again it has been very volatile. In 17 it was 5.1%, in 18 it jumped quite a lot, then in 19 it fell down, and again 20 was a peak with both ROE and ROC above 50%. But if you look at the 2021 and trailing 12 month, ROE and ROC both are looking good. The latest ROE is 17.4% and ROC is 23%, which is looking good. So overall on profitability, I would again rate it 9 out of 10. Next, if you look at the leverage ratio, Indiamart debt to equity has been almost 0, and then it increased to 0.28, but currently it is 0.03. So the debt levels are almost negligible. Hence on leverage ratio, I would rate it 10 on 10. If you look at the reserves of the company, it was in loss till 18, and then look at this, from there the reserve increased to 132 crore, 246, and then 1586, and latest reserve is 1720 crore. And if you look at the stock price movement, it launched its IPO in June 2019 at a price of rupees 1000, and from there it touched a peak of 10,000 in just 1.5 years. So basically 10x growth in next 1.5 years. But from the peak of 10,000 in February 21, the share started to fall, and it touched a low of 4,000 rupees recently. So there was a fall of 60% from the peak. However, there's a slight recovery, and currently it is trading at levels of around 5,000 rupees. The reason for fall I could understand is that due to COVID lockdown, there was a sudden spike in online business that resulted in a huge surge in revenue and profits, and that got reflected in Indiamart share price. And of course, that was the time of bull run and huge liquidity. However, after the opening up of economy, the revenues and profit declined, and that resulted in a sharp fall in share price. Now, if you look at the shareholding pattern, promoter shareholding has slightly reduced from 52.34% to 49.52%. And if you look at FII holding, it has increased quite a lot from 10.1% to currently it is 26.53%, although FIIs have slightly reduced the shareholding as compared to September quarter. If you look at DII holding, it was 3.59% and it is currently 5.34%, although DII have slightly increased the shareholding in December quarter as compared to September quarter. So in this video, we discuss the fundamentals of Indiamart. Company is the leader in online B2B marketplace business in India, and this B2B segment is highly fragmented. Due to rising adoption of internet and smartphone, many small and medium enterprises are exploring online business opportunity, and that would create a good demand for Indiamart. Company is growing both organically and inorganically via acquisition. Financially, company looks good with high growth and high profitability with negligible debt. As far as valuation is concerned, Indiamart share jumped to levels of 10,000 and became highly overvalued, and then corrected to levels of 4,000. From there, currently Indiamart is trading at levels of around 4,900 at a P ratio of 49. Now, considering the future growth prospect, the P ratio looks decent, neither too high nor too low. Although I don't expect the share price of Indiamart to jump sharply from current levels, at least for the next few quarters, due to the challenging macro environment. Of course, it would also depend upon its quarterly performance, but the long-term prospects are bright. So you can consider buying it in small quantity and keep adding periodically based on its quarterly performance. Now that the Q4 result season is about to start, we'll get a good picture about Indiamart performance and its future outlook. So what is your take on Indiamart Intermesh? Have you invested in it? Let me know in the comments. I'll see you in next video. Till then, take care.